welcome to the M&A Zing, the show for acquisition entrepreneurs, search funders, and holdco builders across the UK and Europe. Each week, we dive into the real-world strategies, stories, and challenges behind buying and building small businesses. So whether you're searching for your first deal or already running a growing group of companies, this is the place to be. We are back this week with another buy-side breakdown, but a couple of things to touch on first. So we recently celebrated the ECI Awards, kindly sponsored by Gerald Edelman. And
among others, including our good selves. Come on now.
well, yes, they are the lead sponsor. It's the second year we sponsored, right? I think.
Second year we sponsored, third year that they've run this event. It was brilliant. Really, really great. Another nice evening out on Landing 42 in Leadenhall Street. Some additional awards this year, more international winners as well, some European winners. It was good. I think the team put on an excellent event, as always.
Are we up on the 42nd floor to as a kind of parallel of the dizzying heights that ETA are climbing to in the UK?
Apparently so, yeah. Nothing to do with
No,
Hitchhiker's Guide to the Galaxy.
it looked like a really awesome event and some well-deserved winners in that. So yeah, anyone that missed it this time, keep an eye out for it for next year. It's about the same time every year, right? Early November.
Yep, it is. And I think the cycle opens relatively soon for inviting applicants for the next cycle of awards. So yeah.
Okay, well, keep an eye.
Never apply too early.
Keep an eye out on our socials because I do try and repost their stuff whenever they share it. So if they open the registration soon, I'm sure it'll be on our LinkedIn page.
Indeed.
We are in snowy, frosty Britain in the middle of November already.
Really turned, yeah.
Yeah, it hit -4 in Manchester, which as someone who's just moved into a Victorian house has been great. Yeah, it is cold here. And it seems everybody else in ETA lives in Dubai or Spain or Florida. So yes, been very jealous on social media recently.
It certainly hit home as I woke up to the snow all over the cars this morning, right at the school run. That's that kind of now I can see even more reasons beyond the capital gains tax to head for the sunnier climes. So,
well, yeah, on that lovely segue. So it's UK budget next week.
It is.
I wonder what's in store. There's been a bit of flip-flopping from the Labour government and Rachel Reeves. So yeah, I'm not quite sure what to expect. Whether they're going to sort of backpedal on some of their plans or they're going to hit as hard as they think. I really don't know.
I don't know. I feel like one of those hanging stakes that gets beaten about by a hammer. You know, the sort of like the softening or the tenderizing. I feel like we've been tenderized over the last few weeks, where we've been hit with all of the hammer of the potential, bad news, only to find now that actually it's not quite so bad. And think that she's trying to go for an element of relief in the budget, and kind of that unblocking for you. It must be really difficult for her, in all fairness. I know a lot of people are giving her a bashing in the sort of entrepreneurial space, but
Sure.
Yes, she came in with the best of intentions, arguably, to stick to some ironclad rules, and then consequently, I think, misjudged it with the way she went about taxing jobs. And that's obviously caused the cost of borrowing to go up higher than Liz Truss managed to make it. And now she's, the 22 billion that she came with is now a further 25 billion on top. So difficult. And how do you do that while still keeping your manifesto promises? I don't know. It's a difficult boxing in that she's achieved for herself. But I hope that she manages to walk the tightrope well.
It's a tough one, and I know people from various walks of life that have struggled under some of the new rules that Labour brought in. I mean, especially national insurance stuff. I've got a lot of friends that work in construction, for example, that have really felt the pinch with that. And then all the way up until friends that employ and run sort of multinational companies that are also feeling the strain of that. And I feel like there's a lot of disgruntled parties. But look, it wasn't an easy job to come into, right? It's not like they were left a golden chalice that they've somehow poisoned. They didn't start out with a good stead. So yeah.
No note in the desk this time saying sorry, there's no money. But
no, but they could have been. Right?
Might as well have.
Yeah, right?
No, I mean, I think it's slightly odd that a qualified economist didn't realise that taxing jobs was going to drive up inflation. But there we are. We live and learn. So hopefully things are going to come under control, and we're going to have a brighter outlook for 2026 and lead to more enthusiasm and appetite for deals, better lending conditions, more activity overall. So
Yes, in the next episode of the M&A Zing, we're going to be sat here evangelizing about Rachel Reeves and what a great job she's done, I hope.
Oh, you got a guest? Am I not on that one?
Yeah, I've invited Keir Starmer.
He may not still be around either. Anyway,
True.
so let's get into the buy side breakdown that we've got lined up this time. What are we looking at this week, Alfie?
Yeah, so this is much more in your wheelhouse. So the last buy-side breakdown we did, we looked at a vinyl printing company, and it's something that I've got a bit of experience in, but we're going back to sort of where you cut your teeth, and we're looking at a long-established, sort of 30-year-old CNC machining business with around £2.4 million a year in turnover.
Oh, I'm salivating at the prospect of a CNC machining business. I love precision engineering, particularly love kind of asset heavy service businesses like that, where you've got skills, you've got artisanal craft, you've got CAD CAM. There's opportunity. If when done well, and when the order books are full and the full capacity of the machines are filled, they can be really profitable little entities with some great customer loyalty, because the quality of the work normally means that they come back time and time again for additional production runs. So I like them. Loving a 30-year-old one, particularly in that sort of level, above 2 million in revenue. I think what we liked about this one was also the profitability, right? This seems to make some decent money.
Yeah, which is interesting, because you touched on something there which was sort of asset heavy or asset rich. I mean, the figures just don't really add up for me on that point, because they say they've got 700k sitting in the bank, but we're looking at just over 800k in net assets. So, this is something I don't have much experience in. Like, could it be possible for them to be turning over 2.4 million a year in this kind of market with only 100k's worth of kit?
All right, so let's caveat this. First and foremost, we've come up with the idea that if it's the company we think it is, it's sitting on a pot of cash. The listing, in fairness to RightBiz, this particular opportunity is on both RightBiz and Businesses for Sale, as being an international precision engineering and manufacturing company based in the east of England. If it's the one we've identified based on turnover, location, and keywords, then the last filed accounts do suggest that there's a good 700k sat on the balance sheet, but only a 800k net asset value and very little by way of fixed assets. And this is the thing that I think we are sort of puzzling over, is where are the fixed assets for a business that should be quite asset heavy? Thoughts on that?
I mean, I'm confused. There's a couple of possibles that it could be. I mean, one thing that we discussed is that it could be leased equipment, but then surely that would be biting into that profit margin. I'd be surprised if they had a 30% profit margin and they were leasing all their kit.
Yeah. So the listing does indicate that there's a 30% EBITDA adjusted, there or thereabouts. But even if it was unadjusted, even before the adjustments, and maybe it's sort of like mid-20s, that's a healthy net profit margin for a company like this. But yes, you're right. If there was a hefty amount of leasing of the capital equipment going through it, rather than it being sat on the balance sheet, then you'd expect that to dent the profits, and obviously it isn't. So the alternative, they've just written down some pretty old equipment. Implication of which being whoever comes in and buys this firm has potentially got the CapEx of a refresh.
Yeah, so it's a retiring owner sale, and the kit might be as old as the owner.
Well, don't know, 30 years, there's been a lot of advancements in CNC. CNC is probably 20 years realistically in the mainstream, and you're probably on second iteration of that, I guess, if it's outside of its normal warranty. But let's assume they've written it down straight line over a 5-year, 20% a year. You would probably infer from this that the kit is at least outside of warranty at 5 years old. And at that point, can you still get software updates for it? What about buying replacement tooling? I would think you need to price in an expectation that you're going to do some maintenance and some refreshing of the hardware.
Well, and is this a kind of domino effect thing where if you're replacing something, you have to replace something else? Because I'm imagining all pieces of kit and software all kind of talk to each other, right? So it's not like you can come in and replace a few laptops and a couple of machines here and there. I'd imagine that once one thing changes, everything else has to go with it.
Um, well, thankfully, the standards and the protocols for like DWG files and the tool setting and like those are pretty tried and true, and actually haven't necessarily evolved a lot. Certainly, there's often backward compatibility, so I don't think you end up, creating orphaned kit or creating an obligation to upgrade the entire amount in day one. I think you can do it piecemeal over a series of subsequent years. It's going to be more about where you're calling out maintenance, where you're having to shell out more, you know, cost to repair because the kit is past its typical service life. You would normally see people out sweating these assets between 5 and 10 years. But yeah, either changing them because they become beyond economic viability or out of date by way of the tech, as you rightly say, or just new advancements have come along that make it more efficient to buy more recent kit. So could be any one of those, but I think reading from the balance sheet and going, look, there's 100K of fixed assets here, they've been written down. So I'd be looking at some of that 700K's worth of cash and going, well, I probably want to build that into working capital adjustments as a earmarked fund for CapEx, because you've had all the value out of this kit, Mr. Seller, and now we're going to have to kind of dig into our pockets. We'd much rather dig into yours.
Well, yeah, I can imagine. This is interesting. Do you think it makes a big difference, which particular sectors they're serving? I mean, like, is this something that you specialize in? So would you be a kind of generalized CNC machining company, or would you be within aerospace, automotive, medical devices? Is it typical to specialize?
Depends on the materials that you're accustomed to working with, right? So is it CNC standard metals? Is it advanced materials? Is it plastics? What are they actually milling and turning and routing and finishing and polishing, etc.? What are they actually doing with those CNCs? If it's just regular steel, some stainless steel, maybe some aluminium, then yeah, you've got quite a broad set of market verticals that you would be able to serve.
Okay.
Everything from automotive through to aerospace, through to medical, MRI, lots of stuff like that. However, on the tail end of that, you're into some of the specials like duplex and titanium and some of these advanced metals that are used in higher value applications, higher strength to weight ratios typically. And those will normally attract better margins because you're going into markets where people are charging a premium for the end product. So you're ending up charging a premium for the work you're doing. I would want to know the verticals that they serve in order to maybe understand, where the growth potential is. If you were buying into a business that was just doing the regular stuff and hadn't tapped into the vein of the higher value stuff, great. But looking at the margins, if they're doing 30% EBITDA or adjusted or mid-20s unadjusted, probably already doing something a bit clever, probably doing some higher value work.
And I would guess, you perhaps prefer a spread of verticals so you can, avoid any potential headwinds. If automotive, we're transitioning towards EVs and, have medical things changed post-COVID? I'm not entirely sure, but maybe that a kind of a spread would suit you a bit better, I assume.
Yeah, I mean, the sweet spot in this kind of business is you want high volume, because CNC is all about, large production runs. Really, you make your money on being able to do bash out again and again and again and again.
Okay.
If you can have it, tended by machines rather than night shifts, you could end up with the thing running 24/7, knocking out parts, whilst the robot puts new bar in and lifts stillages out at the end. I mean, that's the holy grail. But to do that with high value, high margin parts, high value, high margin segments, that's the sweet spot. So if you can get into some of the titaniums and the duplexes and the high grade aluminiums and be doing that work 24/7, 365, happy days.
Interesting. So is that where you see growth opportunities in this market, or is it like everything else, and there's some gains to be made from bringing AI in? I mean, I'm guessing with the kind of CAD CAM stuff, there
Yeah.
could be a lot more co-piloting happening there. I mean, that's something I have
Right.
no knowledge in, but is there room for growth there too?
Massively, massively. So, what you're speaking to there also is the skills shortage, right? So CAD operators, CAD programmers, CAD designers, they are becoming rarer,
Oh,
and people are
really?
paying. Well, we had an episode, an interview with John Mark Picken
Yes.
a couple of months ago, and he was speaking to exactly this. Like, he's bought a few precision engineering, CNC fabrication companies, and getting the skilled trades is hard. And getting particularly CAD designers and CAM CNC operators, we're paying ever more for those. So the way to be able to improve your profitability is through injecting more tech. And we are kind of at this exciting moment with AI coming into more of the sort of nesting software and the design software, so that you can not be as trained and as sophisticated a designer, but have some of the co-piloting do the heavy lifting for you on some of the advanced design.
So much like dev, where you might have needed a couple of senior engineers, maybe you need one senior, CAD person, and you could have a couple of juniors that are co-piloting with some AI and knocking it up to your senior to sign off on.
You could certainly get more through a CAD department without having to hire more people,
Mm.
as this software continues to improve. And similarly, like I mentioned, like cobots there, now you can be buying collaborative robots from Universal Robotics and KUKA and people like that for 20 grand a throw. That, is like potentially, your return on investments maybe in a year, because or less, because you're not paying staff to stand there and tend machinery. You actually might be able to just get the robots to do the tending. So, I mean, I look at precision engineering of the future, and there'll be, a few of these kind of like, logistic robots running around moving stillages to and from the factory floor. A few bots picking things up and sticking them in the back of the CNC hopper. Um, that's that excites me, that sort of stuff, because there are already some examples, maybe less of them in the UK, where people are running entirely dark, and by dark I mean lights off, 24/7, with robots tending the machines.
Wow, that's so interesting. Touching on the point, Sid, sort of less so in the UK, do you think that we're going to start to see a bit of a renaissance of this and some more investment in this space? Because I know that there are some sort of reshoring tailwinds going on, right? So the UK's had some serious competition from, lower cost economies over time, but supply chain concerns, ESG pressures, geopolitical tensions, there is a lot more manufacturing coming back to the UK. And do you see this as a space that's kind of ripe for benefit from that?
Oh, totally. I mean, UK manufacturing was, I want to use the word decimated, but that might be a little bit of an exaggeration. But it was certainly heavily undermined by the rush to offshore things from kind of like the early 2000s through to kind of COVID era. There was, everybody was pushing stuff out to the east. China, Vietnam, India, and some of the BRIC nations. You've got a lot of work went overseas. But that was fine while we were in a progressive globalized economy where, we could get stuff guaranteed on the water, 4 weeks, door to door, port to port. And, there wasn't volatility in exchange rates or tariffs or, any of the things that interrupt, commercial trade. Now it's a different world entirely, right? We've got, just this morning, China's being accused of spying on us every day. And there's this sort of change in tone, I think, towards the east. We've got more parochialism coming with the governments. We're stuck here in the UK between trying to appease the Yanks and trying to appease the Chinese, it's a difficult, geopolitical environment. So I think, nations are pushing towards this kind of like self-sufficiency. Let's reduce our lead times. Let's improve our kind of self-reliance. But that comes at a cost, because those guys can do it cheaper. um, but if we can do it automated, then it's a different story.
Well, yeah, and I suppose there's different fronts to compete on, right? So if you're going to try and compete on price with China, that's dangerous. But if you want to compete on, precision service, quick turnaround, you've got some space to compete there, right? There's certain industries, I guess, where cost isn't the number one factor. The having it on your doorstep is probably worth a hell of a lot to someone working with some of these more exotic materials that need things there and then.
Yeah, that was the promise of 3D printing, right? And the sort of advanced manufacturing of being able to do smaller runs just in time as you need them without necessarily having to pay a huge premium per part for for the smaller volume. And I think this kind of straddles this line. CNC should be a cost-effective way of being able to produce things. And in smaller batches so that you're not having to tie up loads of working capital in parts. So yes, I do see this as an opportunity to benefit from those tailwinds, as the progressive global kind of environment that was fueling trade for the last 2 decades kind of comes to a bit of a hiatus. I hope it comes back. I hope that, we're all working as one global village again in the not too distant future. But in the meantime, yeah, it's a boon for reshoring.
I was going to say hiatus is a nice positive way to look at it. I hope it's also a hiatus. We can go back to the halcyon days of the early 2000s where everything felt global and friendly.
It's just me being old and thinking everything's a cycle.
Well, I mean, it kind of is. So, actually, so we touched on 2 different things there. We talked about the talent issues and the globalization stuff and stuff being pushed out to the east. Do you think those 2 things are tied? Do you think as sort of the manufacturing moved offshore, we start to see fewer and fewer people being trained in working in these fields in the UK?
Of course.
And now it's come back to bite us.
Yeah, I mean, I spent a lot of my time in industry, being a strong advocate for artisanal skills, vocational skills training, invested a lot of money in, working with colleges to set up fabrication training centers. This was at the time that the apprenticeship levy was coming out and, everybody was being encouraged to look at skills and skills pipelining. I think here we are, fast forward maybe 10 years from when that began, and I don't think we're much further forward. I think health and safety is gone crazy, and you've got tales of people who are apprentices on work where the college won't actually allow them to use the tools that they're being trained on for fear of self harm, which is just madness. But you have got, like as you say, if we don't have a proliferation of places to go to train these people, then we're going to lose the ability to create the skills talent pool, and therefore it's just kind of a managed decline, a spiral of talent. So it's a problem for every skilled industry. You look at construction, you mentioned there, and engineering, like finding talented artisanal skilled trades is increasingly difficult. And you look at this CNC space, it's of a vintage like a lot of these markets where the owners in the 80s and 90s were starting these businesses, and there was a fair amount of labor, but certainly it's a fraction of what it was. But automation is apparently here to save us, and we hopefully find a kind of fair accommodation and balance whereby we've got some good emerging skills, but we've also got a more automated set of options.
It might be one of those markets where actually the proliferation of automation solutions might mean that there are more jobs actually for humans in this space as there becomes more manufacturing comes back to the UK.
Yeah, definitely. But we need to be training for it. And I hear more stories about colleges getting that wrong than I do about them nailing it. So
that's a shame.
Yeah,
that's a shame. And look, we need masters in order to train apprentices. If we've been losing them over the last sort of 10, 20 years, then that becomes tougher and tougher. So hopefully that can be turned around. Maybe in the light of, a bit of that manufacturing reshoring that we spoke about, hopefully things can start to go in the right direction. Colleges can loosen up a little bit. I mean, look, health and safety, we want to make sure everybody's safe at work, but there has to be a limit where if you're working in something, manual and physical, there is going to be some risk. I think it has to kind of be accepted.
Yeah, very, very true. I think we need to get back to some common sense. There was good sort of 150 years of British industrialization where people were safely working and their skills were valued and they were earning good money. That's the optimum. In any case, I hope that this all becomes, again, cyclically. It
Yes.
comes as a resurgence in this space. I'm bullish on domestic fabrication and manufacturing. I think we're gonna need it, particularly right now we've got this sort of defense bounce, again a consequence of the receding from globalism. We now have this kind of like rising GDP commitment to spend on defense. Defense uses a lot of machining and precision engineering, so expect more components to be produced at home. So I'd be looking at this kind of an opportunity, thinking buy it now and ride that wave for the next 5 years.
Super interesting. Well, let's get back to the deal at hand.
Yeah.
What kind of person do you think is looking at buying this company? Who are you competing with?
Yeah, I mean, you're going to get your trade buyers. You're going to get there's some folks doing consolidation in this space, realizing that it's quite fragmented. You've got lots of companies that are this size or smaller, that have they're doing somewhere between 1 and 2.5 mil, serving a small pool of customers within a particular region. They maybe specialize in a certain element. So, if you can pick up 4 or 5 of those nationally, you can start to drive a bit more profitability out of it, because you're owning a substantial amount of the market. And you're getting some economies of scale. So I do think there's ready trade buyers in here, just as we've seen with the plastic vacuum manufacturing or plastic injection molding
Yes.
companies. People going out and buying a few of them and smashing them together, or gracefully integrating them. Sorry, Steve.
I was trying to think of a melting joke there, but I couldn't.
Melting them together. Very good. Very good.
Yeah, thank you.
Yeah, I missed an opportunity for a pun, Alfie.
Unlike you.
We should have scripted this one. But yeah, I think there's trade. I also think self-funded searchers. I think the savvy self-funded searchers are going to look at deals like this. Maybe ones with more fixed assets, because I think you could typically come into these kind of deals leveraging the kit, sale and lease back or whatever.
Yeah.
If it's fully depreciated, there's no value to wring out there, unfortunately, in this particular deal. But you do see some self-funded searchers coming in and levering up the kit for some of the consideration.
Do you think it's something that you think you'd want to have a bit of background in?
Yeah, don't buy this business if you've not worked in engineering.
Okay.
100%.
It's interesting because I spoke to one of our BizCrunch users actually, who was an engineer for a long time, and he said that when he was going to these meetings and talking to business owners, he said that it was a real big plus in his box, because he said otherwise you wouldn't be able to have the conversations in the first place. He said you wouldn't be able to sit down at the table if you didn't know what you were talking about.
No, if you're just coming at this from a spreadsheet and the ability to raise finance, and that's great, that'll get you the deal, probably get you to the table at least. But what are you going to do with it once you've got it? You need to be able to speak the same language as your staff and your customers. You need to very quickly understand the levers and pulleys that make this business tick, and know where to look inside the business to extract the value and dodge the landmines, or defuse them at least. So yeah, I don't think you can come into this without a background in engineering, particularly if you are leveraging the acquisition, if you're taking on a term loan or whatever, which this business would look like it would just about qualify for. Certainly under the growth guarantee scheme, I guess, looking at the size of the sort of deal value. You're going to come in, you're going to have a PG invariably. You're going to have a personal guarantee to have to service on this deal. So you don't want to do it if you're going to be out of your depth.
I think that's a very wise position to take. And given what we know and what we think we know from the company we think it is, what would you be, where would you be placing your bets on valuation wise? If this is you finding this deal, you've got that experience, you could come to the table and know what you're talking about. What do you think?
Yeah, I think there's 2 areas that would anchor the value a little bit for me. One is potential customer concentration issues. So, how many customers do they have? Regular customers. I don't think many of these businesses are going to be hugely diversified in their customer base. You'll find, 1 or 2 customers accounting for 50% plus of the income, probably.
Okay.
So that's one to try and mitigate for in the deal structure. I've said it before, you show me the valuation, I'll show you the deal structure. This would probably be expected to go for 3 times EBITDA adjusted, plus net cash, less typical working capital adjustment. So that would be my gut feel. So, possibly 1.2, which is a 50% premium on the net asset value. So feels about right. But I would see that deal structure having some conditions attached, some deferred consideration, probably 40%. That's how you make this deal work, I think, from a debt service ability. So I don't see it being traded at 5x unless it's to a particular strategic trade acquirer that sees an immediate upside from maybe they compete for the customers and they're going to get it back through additional margin because they're not going to have to be pricing against the person that they've now bought. So if there's regionally a CNC company similar size or bigger, similar profitability, they might pay 4 or 5 times for it because they'll see a clear path to return on investment. But if you're coming in cold to this, you're going to want to mitigate for some of the risk, I think. The seller's leaving, you've got to refresh the kit, and there's a customer concentration potential challenge. 3 for me.
Well, these are all points where having some or a depth of experience in this field will make a big difference because you know upfront immediately what kit needs to be replaced in what order and what kind of cost that would come with. And also, I suppose that customer concentration thing, like for me, immediately, if I saw, 1 or 2 customers making up 40-50% of revenue, that would be a massive red flag for me. Whereas if that's quite standard for these kinds of companies, I guess it would turn you off a little less. If you go into it kind of knowing that's how companies of this size and in this sector kind of operate, then it's less scary.
Yeah, and how long they had the customer for? Like, have they had it for 10 years? In which case, it's not like this year we acquired that customer and next year we got to go find a replacement.
Sure.
And do they have contracts? Do they have patents? Do they have the drawings? Are they the only ones that can do this? You probably find that there's ways to get comfort around that challenge. Notwithstanding, it's still a challenge. When the owner leaves, if the owner's got that relationship and it becomes a sort of moment by which, the customer goes, oh, well, Frank's not in charge anymore. I'll go and see what's out there. There's a natural risk. But if you keep on doing what you do well with that business and you don't look to scalp the customer or suddenly make massive mistakes with their orders, then why should you lose it?
I mean, I guess this is not a huge world, right? I'm guessing that the kind of main players and as those around this size would know each other. Do you think it's common in those moments where Frank leaves that the kind of sharks start to circle and the other companies that can fulfill those orders hear about this and start to send pitches in and start trying to, wine and dine?
Yeah, I mean, inevitably, that's why so many business owners keep this under their hat. They run confidential processes because the last thing they want, before or even after, if they're in a deferred consideration or earn out type situation, is the cat getting out of the bag, the customers starting to shop around. That confidentiality is everything in this game. So you definitely want to make sure that it's not sort of public knowledge, I guess, until it is, and then it's on the buyer to kind of manage that. Just FYI, names changed to preserve the innocent. There is no Frank in this business. Speaking.
Okay, so look, this is say this is a company that you're considering, and we haven't voted on this yet. We excitingly do that soon. You get into the stage of due diligence. What are your priorities? Where are the red flags? Where do you start with this?
Yeah. So I mentioned customer concentration. I'd want to be getting into that and looking at length of tenure with those customers. I'd want to understand, typical quality of earnings here. How are they accounting for things? Are the margins really the margins? Because you can make things look good. Like say, for example, they've been prepaid for something and it's sort of been incorrectly accounted for and it's written up the profitability for the year when actually it should be attributed to next. Things like that, games people play.
Okay.
So I'll be looking at that. I'd definitely be looking at the kit. I'd be getting someone like SGS in or one of these firms that can go and do a fitness for service assessment. So they can come and assess the kit, look at its maintenance records, and identify whether it's going to stand you in a significant liability. I'd also want to, as part of that audit myself, I'd want to make sure that the owner can speak to how well maintained preventatively this kit has been, how problematic it may have been, what the outages may have looked like, what the contingency plan is when they have an outage. Does that just mean, oh, sorry, we're going to be delayed by 2 weeks delivering you your goods? Or is it like, actually, we've got Bertha over here that we fire up when Samson, it needs a service breakdown or whatever. Yeah, you can tell I worked on the shop floor for too long.
I'm having the names. And is there anything there that would be a deal breaker for you? What's the difference between a deal breaker and a sort of potential mitigation?
Yeah, I mean, it's funny, isn't it? Because you don't really get to do the full due diligence until you own the business, arguably, but certainly until you've got the thing under offer. So, might be inclined to see opportunities if there are some amber flags in terms of, risk mitigators through debt, through deal structure modification, retrading a little bit. So I think once I've got comfort to make an offer, it'll probably take quite a bit to dissuade me from seeing that offer through. But if it turned out that actually, those orders, say for example, that customer had already served notice, or the kit was definitely on its last legs, and they've actually been secretly subbing this out to someone else, and in the last 6 months, if they're trying to limp through to a sale, or there has been some kind of massive accounting error that's been that's led to this artificially high. I mean, looking at this business, I don't see any of that. I think it's a really clean, modern, well-run operation. I think it looks exciting. I mean, we're going to get to the vote in a minute, but spoilers, I'm bullish.
So yeah, I mean that was one of my next questions. Do you think there's anything hidden in this, or do you think it is just a particularly well run? Maybe there might be something going on that's explaining that 30%, or they've just done a really good job, and maybe it's just slightly old kit, and that's the only thing that you've got to really look out for when you first show up there.
That's my hope. I'm trying not to get emotionally attached. But yeah, I'd certainly I'd go in with that sort of lens and expectation, and anything that kind of dragged me below that norm, that level, would probably impede my appetite in terms of deal multiple. I'd want to mitigate for that in the multiple, or in the structure. So it's like, yeah, you can have your 3.5, but I want that over 5 years or something, in terms of a healthy percentage of it, half of it maybe on DEFCON. So yeah, I think there's ways of mitigating for it and setting some expectations in the SPA, some kind of warranties in the SPA. So I don't know. It doesn't look like there's anything in this business that I couldn't overcome, he said boldly.
I mean, look, it looks super interesting. I think maybe maybe this is a good segue into us voting on this. I think I can already guess your vote, but I don't take that away from you. So yeah, look,
we'll keep your mysterious vote till after mine. But yes, this definitely appeals. Feels like the right size, location, age, shape, and style of business in the sector that I like. So yeah, if I can get a deal that enables me to have enough cash to refresh the CapEx, the capital plant, then I'm open. So it's a thumbs up from me.
I think that for the right operator, it could be a really solid buy. But I think I would be so out of my depth with this. This is really not my wheelhouse. So if you wanted to buy it and you need some help with the marketing and the growth stuff, then you can bring me in. But it's gonna have to be a no from me, because I do not know my titanium from my tungsten. So no, I'm afraid not.
Very good.
Thank you. All right, awesome. Well, look, that was really interesting. I love, one of my favorite things about these buy-side breakdowns is exploring an industry and a sector that I probably wouldn't otherwise look at. And I'm sure that's probably the same for everybody listening along. So as always, please do post your yays or nays. If anyone has got experience of the CNC and machining world and wants to give their 2 pence, we always welcome it. Have you got any sign-offs for us this week, Gareth, before we let the good people go and continue on with their cold week?
No parish news. Just wrap up warm and think about those who can't. And I think there's the wrap up to warm up coming along, which I think I'd strongly advocate people find some spare coats and go and give them to charity.
Yes.
But yeah, stay warm, stay doing deals that matter, and keep on crunching.
Keep on crunching.